Yeah, to kick it off, maybe let's make a round of introductions. So tell us about yourself, tell us maybe a bit about your investment thesis, because all of us are sort of active in the investment field. And yeah, share us. Let's start with you.
Fantastic. Wonderful. It's on now? Okay, cool. Wonderful. My name is Shrez Ahmed. I've been actively involved in the Crypto Valley ecosystem for the past 6 years or so. I'm the managing partner of Storm Partners, one of the leading Web3 service providers in the space. And more specifically to this panel, we support entities, of course, with capital placement, but more importantly, with one of our most valuable resources, which is time. We help them to scale through the services that we offer and, yeah, support them in that way.
Hi everyone, my name's Leo Groen and it's a pleasure to be here with you. For those of you not familiar with us, Managing Director at Spartan Group, which is an early crypto-native investment banking and asset management firm, which is set up originally out of Singapore and Hong Kong, increasingly moving more globally. We manage over 500 million in the digital asset ecosystem and are fully dedicated to this industry. We run a hedge fund, 2 venture funds, one dedicated to DeFi, one dedicated to gaming, metaverse, and NFT opportunities, and also one of the most active dedicated deal makers and M&A advisors in the industry. So actively involved in this space since 2016, myself personally. Pleasure to be here with you and looking forward to the discussion.
Perfect. Also, hi from my side. My name is Sami Kachan. I am an investment manager at Swisscom Ventures. Swisscom Ventures, the corporate VC arm of Swisscom. More rather on the traditional fund side, as we have 75% of our capital coming from LPs, which are Swiss pension funds and institutional investors. So we do have basically financial objectives at first objective, and then basically the strategic value add. We're active in primarily Series A, Series B. In Europe, North America, and Israel, but also in Switzerland, of course. The investment thesis that we have is basically around institutional digital assets, really kind of supporting the next generation of financial market infrastructure, but also picks and shovels in that industry.
Awesome. So thank you very much, gentlemen, for these short introductions. So for the first question, let's walk a few steps or a few years back into memory lane. So let's think of 2021. Everything was great, right? Amazing events, projects emerging left and right. So from a VC perspective, I think not everything was their flowers, right? Because, yeah, startups had higher demand, startups were pushing. So considering now 2021 and the course of 2022, how do you think, for you guys, the investment approach and investment strategy changed? Because on the one hand, you can say, okay, bear market could be opportunity for investors, right? So maybe Sami, how it did change for you?
Well, what you have seen basically were absolutely high valuations, where you as a VC investor are like, okay, what is the return that I want to make on this one? And ultimately, you had the same problem in 2021, but also in 2022, whereas I think after Terra and all the other kind of bankruptcies, we saw that valuations slowly coming down, primarily in the late stage, and then now going more and more down in the mid-stage area. But we still see that the valuations are up in the early stage. Therefore, it hasn't really changed our approach. I mean, it remained the same. We tried to find basically high-quality founders, high-quality teams with a nice product. But ultimately, we were very diligent on valuations, as we were aware of that the music at some point will stop and had to stop. And I think this is now the period that we're in, but it's a very interesting one because I think now it's the time to invest.
Great. Maybe anything to add from Sheraz or Liro?
Happily jump in here. I think one of the other observations that I would add to obviously what was a period where people were getting carried away with valuations and expectations is certainly the fallout since then. And 2022 has seen a lot of corrections in terms of prices. And I think for me, the biggest KPI and metric of that, though, is if you look at publicly listed crypto businesses, so equity capital markets, most of crypto businesses today are trading at discounted multiples to fintech peers. If you look at payment infrastructure providers, all of the Bitcoin miners, even Coinbase, on a relative basis, they're suppressed. If you take a step downstream and then look at some of the private market transactions still happening in the market today, beginning of 2023, that hasn't caught up yet, which I think, on one hand, to Sami's point, is yes, prices were incredibly high and things were overvalued potentially. But I don't think a lot of that pain has been felt all the way through to some of the private market companies, because what I think is probably the most relevant thing for the conversation here is the level of conviction that people have in this space and industry, right? And I think when it comes to 2017, to take an even further step back, there was a systemic, is this a real industry, top of mind conversation, in your heart conversation with anyone who was a crypto skeptic in 2018-19 with the fallout. In 2023, I haven't had to convince one person why Bitcoin, why digital assets. It's really, people are very quick to laugh at you and, recognize how much money you lost last year, and that's fine, that's a part of the game. But people nowadays understand the infrastructure that's being built, the market and opportunity set that's been created, and the people who have long-term conviction, which as venture capital investors we do, this is the opportunity to continue to participate in that. And I don't think we will go back to even further lows than where we are, probably within now or the next 6 months, to be honest.
Yeah, and I mean, if I may as well. So, an interesting philosophy that we had was as well to a certain extent follow the hype. We were getting involved in projects that were doing very well, that there were a lot of entities that were involved in, and that we could help essentially move forward. But exactly to Leo's point now, we're working a lot with companies that we believe that are going to bring a lot of value in the coming bull market. We can support them in building out, and we know that even though they might not, let's say, specifically have a community today, and they might not be so well known, we know that all of that previous work that had to be done in the ecosystem will no longer actually need to be done there, and that if they have a product or they have a good market fit, it's going to be much easier to allow them to scale when all of, let's say, that traction comes back.
Awesome. So this is actually a point I want to touch upon later again. But again, one step back. So Semi, you said for you guys, in terms of investment strategy, nothing changed too much, right? And does that also reflect on either capital deployed or deals closed when we look back we compare 2021 and 2022?
Well, if you have a look what flowed into the ecosystem, we had around 20 billion last year, 20 billion the year before. And if you have a look at where we placed our bet, that was Fireblocks back in 2019, so really following that kind of infrastructure play. We continue to look into that market, and there were very nice deals actually around that. I think around 10 billion has been deployed in infrastructure last year. And what we see is ultimately that these deals that basically were, from my perspective, the winners, they continue basically to match that high valuation by growing their revenues. And therefore, I think such companies basically will continue to have attraction from the VC side, and will basically will continue to grab market share. And here especially, we are continuing basically to deep dive. But again, as we are in a space where valuations still remain relatively high, if you compare it to other kind of VC verticals, we have to be very diligent. And I think diligent is also the correct word here, given what we have seen with FTX, where some of our VC colleagues have signed term sheets within 24 hours and basically just moved ahead without really doing their job in terms of risk management. I think this is where we have to step in and continue to do our job, not even as an investor, but also as a risk manager.
Great. Maybe anything to add from Leroy or Sheraz?
I mean, we've been investing much more now than we did, let's say, a year ago. Mainly because I do believe that a lot of the firms a year ago actually didn't need so much capital from us, or didn't need so much of the work. We were helping really on kind of that finality. And now a lot of the projects that come to us, we're able to really help them from kind of ground zero and really scale up. And also, let's say, due to the acquired knowledge that we've been able to gain, and a lot of our team members as well, now we understand, okay, what is going to be able to bring them the most value, and we're able to connect them with the right partners as well to be able to allow them to scale in the future.
All right. So now again, you mentioned before, so how you can support the founders, and also how you identify who are good founders. Maybe let's have a bit more of a look into that, right? So how do you actually evaluate the potential of a project? Of course, team, quite important, but what other criteria do you look into? And especially let's say, in a difficult market situation, if there is anything different.
So I can kick this off. I know it's going to be very different across the board here. But what I would say, I mean, Spartan, in terms of our investment thesis on the asset management side, we have been crypto native since day one. So even for our pools of capital, we started with our liquid hedge fund. We then launched a dedicated DeFi venture fund, which was predominantly doing token and crypto native opportunities. Proud to say that we're a supporter of 1inch, one of their early investors, and back in opportunities like these, including Aave Synthetics, Chainlink, many other players who went on to become, let's say, household or blue chip crypto assets in today's market. I think for us has always been follow the strongest technical teams and builders in the ecosystem, ensure that there's integrity in the entrepreneurs and founders behind them, and then support them where possible, get out of the way where you're not supporting them, and allow them to do what they're doing, right? And I think such a big part of what makes crypto and the ecosystem around digital assets what it is the ability to build a community, right? And that's not something that you can fake. You can't fake Twitter followers. You can have fake followers, but you can't fake engagement and interaction. Maybe you can now with post-Elon taking over, but at least previously, these were things that had to be natural, right? And people's demand and interest and participation in Discord channels and governance, these were all things that are very natural as a part of people being involved in communities, being excited by the mission, vision, and ambition of a founder, and working with them to support them on that goal. So for us, it's always been tech first, crypto native, and empowering entrepreneurs who have integrity to go out and create the future financial services within our DeFi venture fund. That's been our strategy.
Yeah, maybe to add to that, I mean, I agree fully to Lior. If you basically think about a B2B, a pure B2B play, I mean, there are multiple factors how to value if a startup is worth an investment or not. But I think if you want to break it down to the three factors that make up 75 to 80% of the investment thesis, it's team, it's product, and it's go-to-market. And ultimately, I mean, what we love to see is serial entrepreneurs who have proven basically a certain playbook to build a company and to scale it up. Especially we, as we're focusing on Series A and B, it's kind of a different type of skill set that is required if you go early stage, for instance, like seed, pre-seed. Then on the technology side, I think it's very important, given that we are in the blockchain space with a high kind of transparency, open source projects, let's say. Here it's important to see that there's a USP in the level of defensibility. And if that is then combined with a go-to-market strategy where you basically see full throttle execution, a sales team that understands its, let's say, enterprise play and how to convert basically the funnel from top to the bottom, this is really what is important. Because what we see a lot is that the majority of founders are lacking the third bit. Yeah. They might have some experience, they might have a very cool product, but at the end they're missing the V8 engine to basically bring everything on the street.
All right. So you mentioned that you guys really, you really look into infrastructure, right? I mean, of course, it's a broad field infrastructure as well, but in general, how important is diversification in your portfolio for you?
It's absolutely important. I mean, the way how we see it at Swisscom Ventures is we basically outlined in our investment hypothesis a kind of an institutional digital asset stack that has started basically with Fireblocks on the custodian side, and then you continue with portfolio management, order execution management systems, data and analytics, risk management, and you name it, right? And basically what we understand here in diversification is, all right, we all agree on the institutional asset side, and now we're diversifying actually along the value chain. So we will not really get into another, let's say, custody play, but we really would like to go into a PMS system, for instance, or a data analytics systems.
Right. How is it for you, Liro?
I think, in general, not much to add on this topic. Diversification is key. We often back multiple projects within a same vertical if we have a high conviction that it is a area that needs disrupting. A lot of people will talk about the competition between your DEX exchanges, DEX aggregators. How does this all fit together? Our view is there will be a way that forms together. I think the innovation that a company like 1inch has done, or let's say the way in which they operate in aggregating a lot of different sources, these are the areas that will be long-term winners as more and more market participants enter the space, more and more people who are institutional in nature, so not just retail money coming in to explore ways to optimize a transactional order flow, but really doing this professionally, systematically, and trading across strategies that they're being professionally running and automating. So I think from that perspective, we see many different use cases, applications where a specific project within a sector or vertical may cater towards a more retail-oriented, more institutional-oriented. Now, of course, at the moment, there's so many different areas of that market, but long-term, you have to believe a lot of that will consolidate. And that's also an area of the industry that we are, very cognizant of. A lot of consolidation happening across servicing different markets and being a holistic platform for digital assets as an asset class.
Yeah, if I may add to that, I think diversification is very important, but over-diversification becomes dilution, essentially. And we actually do enjoy working with multiple layer 1 protocols whereby each one of them actually has their own USP. And we can go more granular into that. And essentially, we don't have to spend more time doing that baseline foundational kind of work where we already have, let's say, be it the competitor analysis and all the research work that our team spends many, many hours doing. We can go directly to the point of, okay, what is the USP and how are we getting more granular? Because I am still of the ethos that there are going to be multiple, let's say, layer 1s out there. There's going to be multiple different projects that have, let's say, a similar mission, but are going to be implementing that in a different way. So actually, we do enjoy sometimes working with, companies that are doing, let's say, same, but different.
All right, awesome. So let's have a quick chat now a bit about, in general, the crypto winter, the bear market itself, or the builders market, how we would like to call it. So Sheraz, I mean, you're like a crypto OG, right? You're in the space for a while. You probably lived through a couple already. So do you see any similarities of what is happening now since, let's say, it started roughly, with the crash of Celsius, in comparison with, let's call it, after the post-ICO hype, etc. Do you see any similarities, what is happening, and are you actually also brave enough to give maybe a prediction to say, hey, this is where we are at now, maybe XYZ date we could expect, some improvements, or even though we have some improvements now, is it a bull trap? So yeah, what is your view on that?
Look, I think people seem rather happy in the room today compared to like 2018, which there was actually not as many people in the room. I think, when you talk about crypto winter, I think Bitcoin is still at like 21K now. So, I mean, it's actually not that bad. A lot of people that have been in the space for quite some time now, they're still quite over the all-time high that it was last bull market, right? Well, let's say the previous one before that. So ultimately, I think we're still all here building. There are a lot of, let's say, larger entities that learned from their mistakes, from what we see, that were able to do better treasury management than they once did. They diversified some of their investments as well. So I think it is definitely a different standpoint than we were in last time. I do believe that there are a lot of large entities. I mean, we're here at the World Economic Forum. It's kind of like one of the most influential events worldwide. There are a lot of entities that we've been meeting, let's say yesterday, and that we will be meeting over this week. There are large enterprises looking to get involved, whereas in 2018, they weren't so, let's say, adamant that it was this, let's say, Web3 movement was going to continue. So I do believe this time is different. I do believe the crypto winter will be shorter, especially due to this kind of, let's say, FOMO element as well. Right? We bounced quite quickly out of, let's say, the lows of 17K. There is, to a certain extent, this fear that I do have that it is a bit of a dead cat bounce, to be very honest. I think we are a little bit in the eye of the storm with regards to what happened with FTX. I think there's still like a lot of implications there that we're going to see come out. But yeah, from everybody that I've been speaking to over the past couple of days, there's a lot of positivity in the room, and I think we're going to be able to push that positivity out into the real world, let's say, and break those silos down.
Yeah, I really love the attitude. Should we always be very positive. So Lero, do you agree with Sheraz?
So in general, I think it's easy to get excited and be positive about what's happening. I mean, if you look at year to date or month to date, January, I think everyone's in the green. So it's a nice start to the year. What I would say is different about this climate and this cycle, in contrast to the last, is at the end of 17 and 18, there was still a relatively strong macro overhead, right? So capital was available, tech was exciting, and people were trying to innovate and try new things. I think today the challenge that we have, and why I agree maybe this isn't the end of of the bear market immediately is I think that there is a lot more global macro uncertainty across all sectors, specifically risk assets, tech, and specifically within the crypto ecosystem. That being said, and again, our fundamental belief at Spartan and why we're set up and doing what we're doing is that creates outlier opportunities, right? And I think being contrarian and having conviction in bets, again, backing entrepreneurs, founders in the right ecosystem who have the right talents, tool sets, and ability to create a following around what they're doing will be disproportionately more successful when you're coming into them now. And I just give the example. So we'd actually basically led and taken to market both Solana and Dapper and the Flow token, right? So this was back in the last bear market at a time when Bitcoin was at between $6,000 to $10,000. No one in the world was talking about a new layer one. When we met Anatoly from Solana for the first time, we thought, wow, this is one of the most impressive entrepreneurs we've ever seen. We're going to support him, get involved, and back this guy on his vision and mission for the industry and ecosystem. And I think that these are obviously some of the outlier opportunities that exist on the crypto native side of this industry, where if you are able to think cross-cycle, contrarian to the world's going to end this year, we're going into a recession view, and really take those long-term bets, which again, from a venture capital fund structure is one of the opportunities that you have. This is the time to be doing that, and certainly how we're viewing the market in terms of doubling down on high conviction projects that we believe in and want to be supportive in engaging them further.
Great. So maybe, Sami, for you, a bit of a different angle on this question. So do you feel, because as Lira already started talking a bit about the macro view of current global markets, war is upon us, we have things don't look so good on a global scale. How much do you think that really impacts crypto and the development of projects?
It impacts crypto. Does it impact the development? That's a different story. I think let's start with the first one. What we have seen over the last, I think, 4 years is actually a change in correlation. So back then, 2018, I think we had a kind of uncorrelated market. Now, if we have a look today at the crypto market, it's really correlated to what we see on the equity market, right? So from that perspective, you do have the macroeconomic factor to be considered here in the development of the crypto market. And here, currently, we do have a few factors to consider. Are we in the eye of the thunderstorm? Probably. Are we actually moving up the valley again? Probably. It's very difficult, basically, to take a guess here. Probably my personal opinion is that we will still see 2 to 3 quarters of kind of sideways, maybe a little bit downwards, and then ultimately towards the end of the year, I hope to have some good signals that the market itself will recover. Coming back on the development side, I think now is the time to develop. Because now basically the market is not really moving, everybody is stuck, they had around runway, around fundraising, but if you have basically a cool idea or if you are in the market already, now is the time actually to either improve your product, launch a new product, or as Leo actually outlined earlier, consolidation. If you have enough cash on your balance sheet, it's the time basically to acquire one of your competitors and increase your market share. And I think this is what we will also see over the next 12 months.
Very interesting view. Yeah, if you...
No, I was just going to say, I think hard times do breed kind of, let's say, strong projects. And, to look at the silver lining, although the pandemic was difficult for, let's say, most people out there, I think it did speed forward digitalization within Switzerland and within a lot of places. I try to be, let's say, as positive as I can about certain areas as well. I do believe that, let's say, in struggling environments, be it, let's say, in conflict zones, etc., there are areas to, let's say, support there from the digital perspective. And I do believe that blockchain technology and all the innovations that we've been creating over the past, let's say, 10 years or so are able to support in hopefully making some of those struggling areas better, or at least kind of helping them to get through some of these more difficult times.
All right. So, Lero, all of you guys agree, right, that it's a time to build, to innovate the space, develop new stuff. So, from the existing industry that we have right now, the most prominent use cases, do you think there is some verticals that are more resilient to the market conditions than others?
Certainly more resilience. I think, for anyone who comes from more classical tech background, looking at the opportunity set within crypto, I mean, there's certainly sectors which are more institutional focused, businesses which are more enterprise software driven, able to monetize and sell SaaS or DaaS business models, so KYC, AML, custodian solutions, et cetera, et cetera. So these are areas which, irrespective of market cycle, yes, maybe new sales pipelines dry down and transaction volumes decrease, but over the long haul, in terms of the adoption and the level of interest and engagement that they have, there are people who need their solutions and services. So this is where people at the moment are still continuing to grow and consolidate businesses, and are the next breed of unicorns that will come out, I think, in the next bull market, when people are able to realize a lot of those upside of the business cases and the revenues that they've grown through the bear market. That being said, I do think one of the biggest opportunity areas, I don't know if this was a topic for it now, but what we have seen really now, I mean, to be very honest, is the implosion of the credit provision and sector of this industry, right? So any of the lenders in this space, basically, if there's any left at this point between BlockFi, Celsius, etc., I think we've proven to ourselves as an industry that we cannot be trusted without oversight and governance for basic risk management of provision of lending and credit. But if we look at the way in which capital markets function, I mean, so debt capital markets, derivatives, and the way in which our capital markets are constructed, this is a much bigger side of the industry than pure play equity spot trading and the things that we're currently feeling comfortable with on crypto. So, for me, looking at this industry, again, placing longer term bets and views on the market, of course, there's enterprise software businesses that look exciting today, but there's also gaps in the market that have been proven with the models that exist today to not work, and therefore create opportunities for people to come up with ways to actually, address what does credit provision within crypto look like in the 2.0, 3.0 version of the crypto industry post all of these implosions, and that's what we're excited about.
I'd like to think that some of us can still be trusted, but I do believe we need a certain set of standards and structure in order to do that. I mean, you were just talking about building, and of course, I think it's the right time. But just taking my marketeer, let's say ex-marketeer background hat, yes, it's time to develop, time to build, etc. But when you're marketing a project, community building, etc., when you're doing so in a bull market, you essentially have to kind of raise above the noise. And everybody is talking, everybody is building or doing something new, bringing out a new announcement. And it becomes extremely hard to kind of be able to put your message out through all of that noise. So I do believe that it is a right time as well to kind of start, if you have, let's say, an interesting vision, mission, or a project that you're building, to start communicating out there as well, because it doesn't necessarily only make sense to just build for, let's say, if this crypto winter lasts 1-2 years, to build for 2 years and then to go out to the market with your beta test and be like, oh wait, like there's no product market fit for what I've created here. So I think it's always a little bit of that hybrid of like going out there as well, even now when there's not so much noise, and trying to kind of, market test a little bit what you're creating, to not just kind of be like head down and not know at all where you're headed.
Maybe one point to add, and I think both of them nailed it, but one thing that you can also use to create resilience is, next to business model and next to basically choosing the right niche to work in, is basically to extend your client base. So, I mean, have a look. We are around here for multiple years, and at the beginning it was small meetups, and actually all people right really deep in the kind of industry. And now, if you have a look today in the audience, we have actually extended that, right? So, people who are not really just crypto natives, basically people from the enterprise world, people from financial institutions, they came basically also now into this community. So we have actually increased the number of participants and the number of the amount of market demand. So if you are actually able to basically create a solution or product that creates real world use cases and makes it seamless basically to adopt, this is ultimately how you actually enhance your potential buyers base and makes it basically much more resilient to any kind of cyclical downturns.
Well, I completely agree. This is actually, for us at CVC, also quite important that we really go on this application layer and that we don't go deeply into speculation, right? So definitely reckon that. Okay, so thinking again now a bit more about different verticals and industries in the Web3 space or in general the blockchain space. Is there some industries where you personally think, hey, this is has potential, this is something great, but is sort of undervalued at the moment? So do you have any examples for it?
Yeah, a few. I think, some of the investments that have worked very well for us are legacy companies, Web2, that work really well and that are essentially just looking to have a Web3 extension to what they're doing. And I would say some very good opportunities at the moment are looking at Web2 companies that work really well, that are very community-oriented or user-oriented, and that could do with remunerating those users or, let's say, having further user engagement with regards to other things, be it, for example, in the music industry with the likes of Spotify and many others. So I would say to kind of take a step back, look at what's working in today's world really well and see, okay, what would adding, let's say, a layer of trust management with, let's say, trust data management there with blockchain technology could help with, and trying not to always reinvent the wheel with innovation. Sometimes it only takes a little bit to go the extra mile.
Yeah. Leroy, Semi, do you have any
Shall I go
predictions or
first?
tips?
It's a difficult one, huh? Okay, I think payments, cross-border payments, CBDC-based payments are undervalued at this stage. I do see a lot of potential there if you just have a look at the total amount of money that basically is transferred on a daily basis, cross-border. Be it from Switzerland to Australia or whatever, it still takes days until the money arrives there, right? And ultimately, here I believe we are now getting there from an infrastructure perspective, be it a custodial wallet or non-custodial wallet. But we're getting there with the help of stablecoins and potentially CBDC, be it wholesale or retail, to basically enhance or actually create new payment rails. And I think we are here just at the beginning. And I'm personally excited in that space to basically see the adoption on the retail banks, but on the other hand, having kind of new players entering the market, facilitating this on the B2B side.
Right. So maybe for the last 3 minutes that we have, so it's been a tough year, it's been a tough few months, but do you think in terms of crypto adoption, because I think sometimes it's a bit of a misconception that people measure the bear market with cryptocurrency prices. But if we really look at the bigger picture, the bigger scale, so how is adoption actually going? So do we see more and more, let's say, big Web2 companies developing stuff? Do we see more and more people actually holding crypto or also being engaged in projects? So how is your view on that? Maybe Leroy, you can start.
Yeah, so I think this is, definitely one of the areas that's most relevant and interesting to us. We just closed in December. We did a final close of our second venture fund, our gaming metaverse and NFT vehicle. It's 130 million to invest in early stage entrepreneurs in that side of the crypto ecosystem. And for me, the whole opportunity set that's created is not about the people in crypto today, right? There's enough people who are excited, they played Axie Infinity, they realized the games suck and then left, right? That's not sustainable, that's not long term. I think where we are in the industry today is if you look at many of the largest lifestyle and consumer brands and moving into the FMCG space, and what these areas have in common is that desire to build a community, engage with people, which if you look at the origins of crypto and the reason why we're all here is, crypto and Bitcoin in and of itself is the first technological innovation which has been designed and implemented bottom up, right? So it wasn't developed in a lab somewhere, wasn't a space application that was then commercialized, the internet, computers, everything that started in a massive room for military or other applications. It was really designed by people to do something for a reason. That's evolved for many reasons, and that's what makes it what it is today. And that, for us, is why we're so excited about the opportunity set that creates for anyone who is in the retail business segment. The people that dominate retail business is consumer brands, consumer and lifestyle brands, and we're seeing an unprecedented amount of people enter this space, make material investments into them. The number of opportunities now that you see within the Flow ecosystem with NBA Top Shot, sneaker partnerships with Nike, Adidas, you name it. These are the types of things where we have to recognize that crypto and blockchain and this whole ecosystem is not just a technological innovation. It's not just a legal or processing innovation. There is a community and culture crypto culture, which is an innovation and a market opportunity and segment in and of itself. And that is an area where we're particularly interested in, because we think that that is not something we've seen in any other vertical or segment as effectively as we're seeing it here in crypto today.
Yeah, so look, I do believe that mass adoption is much easier now, than a year ago. If you really look at it, we were essentially trying to force feed crypto down enterprises, banks' mouths, essentially. And now there's none of that real pressure. There's none of that pressure internally for them or either externally. The way in which we've supported a lot of enterprises is through the areas of education, then research, then strategy, and then implementation. A year ago, we had to do all of those steps in a matter of like weeks, or even we had to skip. It was like, okay, no education, some research, no strategy, implementation. And it was like, wait, but like we have this 4-step process for a reason. And now it's like there's no pressure, so we can take the time to educate the C-suite the way that they might want. We can take the extra time. They can do all the research internally, strategize, let's say build, and then implement and execute when they want in a timely manner. So I believe mass adoption is going to be much better now because it's going to be more natural and organic, and they'll start to understand why we're so passionate about the space we're in.
Awesome. So I see that time is over. Maybe one last word from you, Sammy, if you would like to contribute something to this question.
Yeah, I mean, if you really wanna look for a KPI to the adoption, I think prices is not the right indicator for that. I probably would look for the number of unique wallets and the number of transactions that we have done, and I think that in combination gives you a good estimate of the number of the adoption in the market.
Brilliant. So on that note, thanks again for the great panel discussion, and thanks, OneInch, for having us.